Hey guys, Sage here, and welcome to today's video where we're going to be teaching you high probability setups. Now, I've used all of these setups to help me generate tens of thousands, if not hundreds of thousands of dollars for me over the years in my own trading account. So we're going to go over a lot of information. A lot of it might be a little bit nuanced, but make sure you're paying attention to the details because they can be incredibly lucrative for you in the long term. Without any further ado, don't forget to like, comment, subscribe. This is going to be a jam-packed video with information that you cannot afford to miss. So we'll see you guys here on the other side and hope you guys enjoy. So I'm going to be focusing primarily for this presentation. Again, I can only give you roughly 1 to 2% of everything that I actually have in my head from the experience standpoint, but everything that we will talk about, you can pretty much use on different time frames, okay? If you're more investor mindset and if you're more longer term mindset, that's okay too. It's just a little bit more elongated, your time frames, but the concepts are pretty much the same. You're just getting yourself more time to be successful. In my personal opinion, for you to have some insight and how we do things here at High Strike, we like to go the little brick by brick mentality. The reason why we like to do that is this is not sort of a get rich sort of scheme. That's not how we look at it at all. And we don't operate that way, right? There are days where sometimes you might see on Instagram that I post a $20,000 day. Actually, on Friday, I made a little bit over $3,000 scalping long the market. I actually did that live with the group. But anyway, it's not necessarily about you trying to get as rich as quickly as possible. It's not about that. It's about you getting rich definitively over a long period of time. So I just want to establish the basis here. Everything that I'm going to be talking about in this presentation, we do and we will focus on overall percentages and we will focus on data. But all in all, it's not about you making $25,000, $30,000, $50,000 in the next week just because Meta jumped 20% on Friday, okay? It's not about that. It's about you identifying the opportunities so when they come your way, you're better prepared because you have finited your education and you have a little bit of responsibility with the capital that you're using to trade in the overall market. I say this all the time. The stock market is not for people that are lighthearted. You need to be, or you need to at least have some sort of predator mindset or some sort of shark mindset because people will steal your lunch like you wouldn't believe. So optimism is great in trading, but it's not the basis of making your decisions. Everything needs to be made off of data. And this is what we're going to be talking about in this presentation. So all that being said, that was just a quick 5-minute introduction. Hopefully I set the basis of where we're going with this presentation. Again, I'm only going to give you roughly about 1 to 2% of everything that it is that I know. We're not going to go over fundamental analysis. We will go over technical analysis, of course, on different time frames. But all in all, 45 minutes is not enough. We need to do our homework. And at the end of the presentation, I will recommend a couple books to you guys of things that you can do your homework on that I would highly, highly recommend everyone partake in. Spend about 50 bucks on the books and you guys should be okay. All right, let's continue here with the presentation. Today's agenda, profitable trading patterns. I am a trading pattern fanatic, and I also like to use indicators. Pretty much the only indicators that I like are going to be your moving averages and also your volume weighted price average. So those are probably the primary things that I'm using more so on the shorter time frames. Now on longer time frames, I'm using something called order option flow. I didn't do this in the last webinar, but I'll talk a little bit about order option flow today and how I use order option flow in order for me to gauge better decisions going forward for more longer term trades, especially if you're doing something like option selling, which is my primary gig, right? I am primarily an option seller. We're going to talk about scaling opportunities. So this one is not so difficult. You're going to trade differently if you're trading $1,000 account or if you're trading $100,000 account. So we'll talk about scalability, but more so, just going to throw this out there. If you're trading with $100,000, that's normally where you want to take your foot off the gas a little bit because you don't have to work so hard in order for you to get maybe $1,000, $2,000, even for a specific day, right? That's not necessarily a very large gain, but it is some pretty good money if you are making that consistently on a day-to-day basis. Next, we're going to talk about entry confirmations. This is probably one of the most important things and why the majority of you guys are here. Let me just allow recording here real quick. This is probably why the majority of you guys are here, right? So entry confirmations on either your long or your short positions. It's kind of unilaterally biased right now because pretty much everything in the market seems like if it touches tech or if it touches AI, the entry confirmation is pretty much anywhere. That's kind of what it feels like. But we'll talk more so about entry confirmations on the shorter time frames. And then fourthly is going to be time frames, right? So where do we spend the majority of our times? Do we spend our time on the 1 minute,
5 minute, 15, 30, so on and so forth. So I'll talk about the pros and cons of each different time frames and where I'm looking for my confirmation, especially if I'm looking to catch, I would say, a little bit of a broader move. Next thing we'll talk about is more so live examples. This is pretty cool because I was on live on Friday and I did signal that long position. I didn't hold it out, right? If I held my long positions on Friday, it would have been almost a 300% move. I didn't catch a 300% move. I caught roughly about a 40 to 50% move. And for me, I thought it was good where it is. So we'll talk about setting levels more so not on live examples, but more so on live charts, semi-live charts. We'll call it that. And then lastly, we'll talk about the alpha program and we'll see exactly what the alpha program is all about and what we can offer you guys. All right, next slide. So the importance of high probability setups. You guys can read this verbatim as I'm going through the slide, but really the importance of you having a setup or for you to have some sort of mechanics is you doing the same thing over and over and over again. I don't know how many people will agree with this, but if you come from a business sort of background, your business does the same product or service. Obviously, we're going to always try to tinker with the same product and service as time goes by, but it's basically the same thing over and over again. It's the same thing with trading, guys. We're not necessarily looking to reinvent the wheel or try to take some incredibly crazy sort of entry just because we feel like something is going to magically happen in the overall market. What you want to do is you want to have roughly the same sort of setups that you're constantly looking for. And so long as you're getting your confirmations, as many as you possibly can get, then you're looking to take either your short or your long position, or even your neutral bias position for those of you that know what an iron condor is, or an iron butterfly, so on and so forth, calendar spreads, things like that. So when we're looking to find high probability setups, all we're going to do is we're going to back test data and we're going to see what it is that works a little bit better than other positions. So for example, we're going to talk about a couple patterns. Some of you might have heard of these before, so there's really not going to be too much new information, more so just spotting them out on the chart. For me, I absolutely love triple bottoms and triple tops. I love trading them because they have a pretty decent success rate. All right, so let's continue here. All right, before we continue, I've already stated this a couple times, but there is no possible way that I can give you all of what it is that we know here at High Strike. First of all, we all have different trading strategies, and also what comes along with trading is a basic sense of economics and also where the drivers are in the market. For example, if I were to tell you guys, what is driving the market today? Does anyone really have a response that they'd like to throw in the chat real quick? I have a pretty definitive one, but what's driving the overall run in the market? AI, 100%. So if you're aware of that, if you are aware of which are the companies that are allocating more so in the space, you probably are sort of front running this, right? We actually saw on CNBC, there was a guy that was, he allocated quite a bit of money in Facebook when it was trading roughly at about $120. So the guy had a 200% return on his shares for Meta. I thought that was a really interesting interview. He was an asset manager. I believe he was about 42 years old, but he saw that Meta was looking to allocate in the AI space, and it paid off for him on Friday, big time. All right, so even before we continue, just to set expectations appropriately, I can't give you the entire cookbook here because I just don't have enough time. But what I can give you is at least a peek through the door so you guys can see exactly what it is that we do in our Discord group and definitively what we do in our alpha program. All right, so next, why wait on a setup? There's a couple of reasons. I'm not going to detail everything out, but probably one of the most important things is going to be risk management. Now, how is waiting for a setup possibly risk management? Well, there's two facets to this. If you're waiting for a setup that has worked for you in the past or has a relatively high success rate, you're already mitigating some of your risk. And on top of that, if you're not taking egregiously large positions in either direction, then you're also mitigating risk and you're setting expectations accordingly. There's a really interesting quote by Kobe Bryant. It's more or less this, it's not verbatim, but you get nervous when you don't have the overall, you don't have the practice underhand. Or let me rephrase this. You're never going to be fully prepared for anything, especially in the stock market. I'm sure all of us, when we were in a trade, we get fairly nervous, especially if it's a bigger position. We get rid of that the more we start to do something and the more we see something sort of gauging our way for success. So when we're looking to trade patterns, We know that if the pattern goes awry, then from there we have a cutoff point where we don't have to emotionally be in the trade any longer. So this is probably the most important reason why we need to not only develop a strategy surrounding a specific pattern or a specific entry based off of an indicator, but we also always need to take the same sort of indication over and over and over again. And there's plenty of people that have already done the math for you. You don't have to go out and buy some fancy backlogging program. We don't have to do that. There's websites that show us which patterns have more of a success rate than others. So we don't have to worry about that at all. Increased success rate overall. If you're doing the same thing over and over and you have an edge in that particular strategy, then obviously you will incur losses, but you're going to know how to maneuver some of these chaotic moments that you inevitably will encounter in the market. Is there such thing as a 95% success rate? There is, but it doesn't always translate into perfect profit, right? A good success rate can be anywhere between 40 to about 65%. What you need to evade is very large losers. So you can have a success rate of 20%. There's actually very famous commodity traders that some of them have success rates of about 15%. But those 15%, when they win pretty big and they limit their losses, right? So there's a number of examples. We're not going to go over every single one of them, but win rate doesn't necessarily have to be absolutely everything. Emotional discipline is a given. I don't need to explain that. Resource optimization, that's another thing. If you have the resources of what sort of patterns that you want to trade long term, then you really don't have to go out and do some crazy convoluted sort of engineering, right? We don't have to do that, right? If you're looking to build something and it works, why wouldn't it work for the next several occasions that you're looking for in the future? Improved decision making. This is a big one for me. I'm not normally trying to hit a moving target. I'm trying to look for the same target. And if it's lining up, if it has several levels of confluence, then from there I take the trade. And then learning and constantly improving. Obviously, that's another given. So how many setups do we actually need for us to trade on a consistent basis? So I asked this in my other webinar. I want to ask this again because I want to gauge how many trading setups are you guys normally taking? There's no wrong or right answer. All of the traders here in the Discord, we all have different answers. But for setups, how many setups would you guys say that you trade off of? I often hear that newer traders normally don't have any idea, but some of the traders that have a little bit more experience, you guys are really going to get this question here. That's my problem. I look for too many different ones. That's a problem that as long as you're recognizing, we're going to talk about that here today. There's two with confirmations, 1 to 3. Cool. 1 to 2, gap up. Okay. 2 to 3. Awesome. Okay. Cool. I say this all the time in the Discord group. I'm looking to trade against the casino. It's the most elaborative casino in the world. It's more elaborative than Las Vegas, in my personal opinion. So when you're looking to sit at the casino, for me, the more tries you give yourself, the more you're setting up yourself, not only for you to lose on the day, but you're giving the edge to the casino. So for me, I have about 5 to about 7 setups that I like to trade on a consistent basis. If I see them on the shorter time frames, then it's all going to depend on what the supply and demand levels are, and then where we're trading on the VWAP. Now, for larger time frames, I'm also going to add an additional element to that, which is going to be order option flow. But for me, it's about 5 setups. Anything more than 5 to about 7 setups, I'm usually not chasing that, right? I want to go to tried and true. If it tastes good, if the steak tastes good, why would I want to grill it a different way, right? So that's sort of my mindset. And another thing that I also like to consider is I have a 3 trade limit for my day trading strategy. If I go over 3 day trades and I lose on all 3 of them, we'll talk about this in a second for risk allocation. I'm normally not looking to chase any more trades. Why? Because of that mindset that I have for myself. If I'm sitting too long at the casino, what's going to happen is if you understand the mathematics behind how casinos make money, sometimes they have ridiculously large payouts. They pay out $2 million for a player, for example, at one of the slot machines. It doesn't matter. Over time, they will have that it's not even theoretical. We keep on saying that, but you will have that edge that will play against you. So for me, it's 3 trades. If you're someone that's taking 18, 20 trades on a single day, you must be a phenomenal scalper, a phenomenal intraday trader. It's fine to do that, but you want to try to fine tune your strategy to at least less than 5 day trades in a single day. If you lose on all 5 of your day trades, in my opinion, your strategy is not working. You should be winning at least 1 to 2 of those 3 trades. If you win on all 3 trades, congratulations, you've made your money that day. Enjoy your day, enjoy your life, right? It's not about hitting home runs. It's about getting your strategy down pat. You will hit home runs eventually, but it's all about getting to first base for anyone that likes baseball, which I don't, but it's a great analogy. All right, let's go to the next slide. For me, it's anywhere between 5 to 8 setups. So there you go. All right. So these are some of the things that I use for confirmations. I'm going to go just very quickly through all of them. Trend confirmation. Do we have trend confirmation in the market? I think we do. We just got some trend confirmation off of Amazon. AWS absolutely slammed. Microsoft also had a slam earnings quarter, and also Meta blew it out of the water, is literally taking Google's lunch. So we do have some trend confirmation. We have that in tech, and we also have that for SPY. Not so much with IWM, but we do have that on DIA, excuse me. Support and resistance levels. So we're going to talk about setting those levels and why I like certain levels above others. Volume analysis. Volume, I always say this, where there's smoke, there's fire. If there's volume behind a particular candle, either on the smaller time frames or larger time frames, there's something going on. It's not just the algos that are flickering, but there might be some traders behind that as well. Make no mistake, you are trading against robots. So those spikes that you see on the charts, normally those are not human beings. Those are being triggered by specific algos that are calculating a million different things at the same time. So make no mistake, that is what you're trading against. So this is why we have to have as many confirmations as humanly possible. Price patterns, chart formulations, right? This is going to be what we're talking about today. We're going to use chart patterns. We're also going to use price action, and we're going to use the volume indicator, and we're going to use the VWAP to have those confirmations for either a long or a short, and then setting price targets. Technical indicators, whether you're using RSI, MACD, I don't love them. I use them on larger time frames, but right now for the shorter time frames, especially all the way up to the 1 hour, I'm just using VWAP. That's it. Candlestick patterns. If you understand anything about candlestick patterns, I use a little bit of that as well. For me, the two that are most important, bullish engulfing, bearish engulfing. Fibonacci levels. If you're a Fibonacci trader, we like to talk about retracements. The number one stock where retracements seems to work pretty well on, can anyone guess what it is? Just real quick, just throw a ticker out there, guys. What's probably the number one stock where fibs work probably better than anything else? Almost. Apple. There you go. Apple. Apple is the number one fib level that is pretty darn accurate. So Apple follows that line pretty well. So there's a couple articles. All you have to do is do a quick Google search on Fibonacci levels for Apple. It respects those levels unbelievably well. Breakouts and then breakdowns. So this is pretty easy, right? So you get a breakdown of a neckline on a rounded top, boom, that's your confirmation for a long or a short position. So you need to know that terminology. You need to know that if you have an engineering background or an engineering mindset, you just need to know the terminologies and the triggers for specific patterns that you're looking to take, excuse me. So those are going to be your breakouts and then your breakdowns. Are they always confirmation for continuation in either direction? No, it's not. So this is why we also need to account for support and resistance levels. Economic indicators, news releases. What happened on Friday pre-market? Well, we got the jobs report. It was double the expectation of every single expert that was on the board. So all of them got them wrong. So why did we start selling off on SPY when we were trading at roughly 49.50 on ES futures? Well, there was new economic news that was introduced, right? So we doubled the expectations for jobs coming in. Obviously, Powell is trying to slow down the overall market. So interest rates have been pushed back further than what everyone anticipated. So the market took that initially negatively. Now, we did have a little bit of a brush up, but more so on the tech sector. So this has everything to do with economic indicators and news releases. If you are not aware of when news is going to be released, especially in interest rate sensitive environments, you're at a disadvantage because that's what everyone is looking at right now. And it doesn't matter if we're in sensitive environments, you need to just be aware of them. Sentiment analysis. This is what we're going to talk about when we talk about order option flow, and then confluence factors. Does everyone know what confluence means? All right, I'm going to go over this real quick. I'm going to look off here to the side just for some answers, just in case anyone wants to answer what confluence means for you. But confluence, for me, the way that I interpret it is several confirmations on different analytical factors that you have for yourself. So for example, if I'm looking at a demand level, but it doesn't look like it will hold, I'm going to look at order option flow, and I'm also going to look at volume and any sort of bullish engulfing to confirm if we have confluence at a specific level or not, right? So I do this quite often on especially my longer term trades. I did this on SOXL. So I'm just going to bring this up real quick. On SOXL, when we were trading all the way down at about $6, roughly about 2.5 years ago, I noticed that there was confluence on SOXL. So what did I do? I said that I wanted to take a long position when it was trading at $8. I believe it was $8 at the time. So you guys are going to understand what I'm talking about when I say confluence. So when I'm looking at SOXL, I had several factors and several things that were jumping at me. And then For me, I determined that it was Confluence. I made a lot of money on this trade, a lot. So I'm looking at elevated volume. I'm looking at us trading at a pretty decent demand level. And then when we started getting a confirmation, roughly at around $7.50 to about $8.50, I got some bullish engulfing and I've been riding it ever since. I actually took off my shares closer to $22, so I'm not riding it up to 33. But nonetheless, this is a very, very clear and clean example of what Confluence is. I used a little bit of moving averages, but for me, where there's smoke, there's fire. If there's volume elevated on any particular stock, in this example, this is a 3 times leveraged ETF, but if it's any particular stock, if we notice elevated volume, I'm usually paying some interest, okay? So this is just a clear little example here. All right, let's get back to the slides. What confirmation indicators am I going to be showing you today? Price action, VWAP, volume profile, exponential moving averages, and then high probability setups and patterns. Head and shoulders patterns, double tops, triple tops, you guys get it. Rounded tops, rounded bottoms, those are also an accessory to everything that it is that I do. So the more touches we get in a specific area, that's normally where the highest amount of energy is building up, right? So then we're looking for either a break to the upside or a break below what we call a neckline. So we have that. Then we're going to look at ascending and descending wedges. Descending wedge, I'll give you guys an example real quick, jumping back and forth onto the chart. I called out a trade on Tesla as a descending wedge. In my opinion, we were looking to give up the floor here on Tesla. I did signal a position for us to take short. Coincidentally, it was for earnings, but we'll just use the chart here in essence to dissect the trade. So I was looking at lower highs overall on the daily time frame, and I was looking for this bad boy to put in a lower low. We were trading below the VWAP, so there was no momentum on this. And then, of course, we do have some levels of support on the daily time frame. So we'll jump into the daily real quick. But nonetheless, the momentum coming into this crucial demand level had no signs of slowing down. So for me, this was a falling wedge that I was looking to follow through with, ended up making some pretty decent money on this trade. So we'll be talking about that as soon as I jump into some live charts here. How to set yourself up for success, even if you are stopped out on a trade. I've done several presentations on this, but I go by a 3 trade concept. So if I can't get the trade that I want in 3 trades, I'm going to give up on the position. And then I'll look for low bearing fruits somewhere down the line, right? So that means if I'm looking to take a short position on Tesla and I lose on all 3 trades, I'm probably not going to be trading Tesla anymore for that day or for a specific time period. All right, so we're good here. And then setting zones on your chart. We'll talk about that when we get onto the live chart. All right, so I did mention some bullish and bearish engulfing sort of patterns. When we're looking to trade at certain demand or certain supply levels, these are probably going to be the most distinctive pattern or at least candlestick that I'm looking for. So either a bullish engulfing candle or a bearish engulfing candle. You normally can pull them out pretty quickly on a chart. You do have software that can do this for you as well. I use TrendSpider and I also use TV. There are indicators in there where you can just jump into TS, for example. And then for me, you can just use candle patterns, right? So if I want to throw that on my chart, it's going to show me that on the 1 hour, 2 hour time frame, so on and so forth. So there's a slew of them here. I'm only looking for the bullish and bearish engulfing, and you have that on TV as well. And this is what they're going to look like right here. So for me, if we're looking at some sort of engulfing candle, the more I see volume on that candle, the more I'm leaning in that overall direction. Now, if you have very strong engulfing where you literally engulf the previous sell-off candle, I'm usually looking to take that trade. I'll give you an example of exactly where I saw this for myself on a trade that I signaled this week. For me, we have some engulfing candle here on Etsy. Why is this an engulfing candle? If we're looking at it, we're already at a pretty decent demand level, are we not? So this demand level is $65. Now, why is this trade interesting to me? If I'm looking here on the 2 hour time frame and I'm blowing up this chart, hopefully everyone can see this. If we're blowing up this chart, this candle right here, it has completely engulfed the $71.50 level. And it did so with a little bit of volume, I would say. So if we're jumping here on the daily time frame, when I took this trade, not only did we break above VWAP, but we also started engulfing the candle and it was shot up by quite a bit of volume. We're not going to be talking about this indicator today because, again, I don't have all the time in the world, but I also use something called the TTM Squeeze or just the Squeeze Pro. I'm going to show you guys how you can get this. I paid $700 for this indicator. You guys are going to get it for free, okay? So if nothing else, if you learn nothing else from this presentation, you'll get this indicator that I paid literally $700 for. You'll get it for free if you use TV, not TrendSpider. TrendSpider, you can get it It's a not a delayed version, but it's a diluted version from the one that I'm going to show you guys. All right. So Etsy for me is already following suit with some of the indicators that we talked about. Now let's go to the next couple slides here. All right, key elements of an unsuccessful trade. Y'all can read this as I'm sort of going through the bullet points, but break of key support. If you're breaking the key support, the trade is no good. Trend reversal patterns. So if you're looking at a long position and all of a sudden that trend looks like it reversed and it started cutting below a specific designated level that you have a losing trade. Change in fundamentals of the candles. That's another indication that your trade is unsuccessful. Divergence of technical indicators. Divergence is normally when you're using more than one indicator. Some of you are only using your VWAP. That's okay. If you're using VWAP and volume, if there's divergence there, that's probably going to be your sign where you don't want to be holding on to the trade for too long. Failure to make new higher highs, new higher lows, so on and so forth. This would be sort of a trend nullification of your position if you're looking to take long. I mean, there's a whole slew of these. Ultimately, for beginning traders, when we're looking at a failed trade, it's not necessarily that you lost on the trade. It has nothing to do with that. It's more your management of the trade. So if you take, let's just say hypothetically, if you take a long position on spot, actually let's go on IWM. I think IWM is a good example. If I take a long position on IWM, if I'm stopped out of the trade, it doesn't mean that I'm a loser trader. It has nothing to do with that. But if I hold on to, let's say I took a long position here and I'm holding on to the position because I think that the trade will be reverting sometime here next week, and I took a 7 DTE, if I didn't follow my mechanics, that is the error of your overall trade, especially if you're doing this for the lower time frames or intraday scalping, so on and so forth. So it's not the fact that you will lose on a trade. And believe you me, you will lose on many, many trades. It's the fact that you will not manage the trade correctly. All right. So that's one of the factors here. And you guys can read this a little bit later. There's a lot of information here, but basically if you're pulling down 30, 40, 50% on your intraday trade or your scalping trade, there's probably something incorrectly going on here. All right, risk management. This we'll go through fairly quickly as well before we jump onto the charts. If you're risk adverse, 1% or less. If you're moderately risk adverse, then 1 to 2%, right? If you're trading with $1,000, you shouldn't be putting up $500 per position unless you have a very, very tight stop loss. And more of an aggressive approach is anywhere between 2 to 5% per position on each given trade. So if you think about it like this is how I normally like to teach this. If you're sitting at the roulette wheel, which many of you don't know me, but I almost became a professional gambler because I absolutely love playing at the casinos. I like playing Texas and I like playing the roulette wheel. Every time I go to the roulette wheel at the casino, I'm usually coming out with a couple hundred, if not a couple $1,000s. It's because I know the overall risk approach. I'm not looking to risk all my capital at a single go. What I'm trying to do is almost use a martingale system. So my martingale system tops out at 3 trades, right? Some of you might go to 4 or 5, so on and so forth. You want to have enough capital allocation where you have several tries at the position, not that you're putting up $1,000 to try to double it the next day, right? That normally doesn't work out quite well. So for me, I'm more of a moderate risk approach. So I'm generally between 1 to 3% on each given position. So you guys have several examples here. If you're trading with less than $25,000, you should not be taking large positions whatsoever. You should be in the vicinity of about 150 to maybe about $400 per position, in my personal opinion. So you can start building the account up relatively slowly. Don't focus on large gains. I highly recommend you don't focus on that. I focus that you recommend that you focus on your skill set rather than anything else. Focus on getting really good with small amounts of capital. And then from there, you can start scaling up. So cool. We're done with this. All right. So these are some of the patterns that I like to look for on a very, very consistent basis. So we're going to learn about price action and reading it and how we would take some entries here on the VWAP. Again, remember guys, I cannot give you absolutely everything that I know. It's impossible for me to do so. I can be here for 6 hours and we still wouldn't get through everything that it is that you need in order for you to trade appropriately. However, I can give you a glimpse into what it is that we do here on the Discord channel for you guys to get a better sense that we're not just throwing things at the wall. We're literally coming at this with some specific approach. So some of the approaches and patterns that I like to use is confluence. That's probably the number one thing. So the more we get confluence on a specific pattern, that's where I'm looking to pull the trigger. I'm going to show you an example of where I did that on Friday. This is literally yesterday. So I'm going to show you what it is I saw. I'll show you even the watch list that I put out there. And then you guys can have a better sense of why it is that I had a specific opinion. So we have breakout trades, trend backs, we have supports. We have trades where we're sweeping below a little bit of the support area here, but so long as it's not a very strong sweep, I'm normally looking to take the position depending on where we are in VWAP. Then I love double bottoms, love triple bottoms, love double tops, love triple tops. The triple tops specifically are the patterns that I like just so much. And depending on how we reject on that third triple top or triple bottom, if we get some volume coming in there, and those trades I absolutely love. They have a pretty high success rate. The success rate is going to range anywhere between 65 to about 72%. And I'll show you guys a couple websites that you can visit here as well. We have bearish patterns here. And then we have falling wedges and rising wedges. So these are just some patterns that we're going to look out for. I don't want you to focus so much on the rising wedges and the falling wedges. I want you more so to focus on your head and shoulders pattern, inverse head and shoulders pattern, double tops, triple tops, and then vice versa to that as well. And I also want you to focus on your supply and demand levels and your VWAPs. These are the high probability trades and setups that we're going to be looking at here in just a couple minutes. And then these are some of my favorite patterns on the higher time frames, right? So I just laid these out for you. I love my rounded bottoms. I love my rounded tops. I love my cup and handles, which it can be interpreted as a rounded bottom as well. It just has literally that definitive handle here at the cusp. And yeah, this is it, man. So if I'm looking at Etsy, right, I'm not saying that Etsy is going to win. It is a trade that I have a few $1,000s in right now. But if I'm looking at Etsy, what are some of the things, just looking at this presentation, what are some of the things that we might see here? First of all, we have a break above the VWAP on the larger time frame. And then we have not just a double bottom here, but this, I would consider this an inverse head and shoulders pattern. So we have that, and that move is already made, correct? But here, if we look on shorter time frames, if we're trying to analyze this and trying to line everything up, we have a triple bottom, do we not? So we have a triple bottom, we have the engulfing, and then we have that VWAP cross to the upside. So there's a couple of factors that would constitute as confluence in this situation. So this for me would be a high probability setup. Now, an additional factor on top of this, I'm sure the veterans know this and are doing this already, you need to have an area for you to beat. What's that area here on Etsy? For me, that's going to be the $72.50 zone. We beat that. Now we're looking at a potential target all the way up to, and I have that target here at $80. So we have a $5 move to catch. On top of this, I'm going to give myself just a little bit more time. But the reason why I took this trade long is more so what we were seeing on the 4-hour and the daily, the volume. Volume for me is everything. Where there's smoke, there's fire, in my personal opinion. Now, how would I retrace this if this trade no longer is going in my favor? It's going to depend on how much risk I have on this and where I would set my stop loss. So for me, if I'm jumping in on the 2-hour time frame, I got in on Etsy roughly at about $72.20. I'm just going to set my stop loss just a little bit lower than that. So if I risk on this trade, I'm risking about 20, maybe a little less than that, but upwards of 20% on the trade. So if we start pulling back here, then I'll go for the quadruple bottom. Quadruple bottom has a pretty high success rate as well, but that triple bottom is really where I started initiating my overall opinion on this trade. So hopefully that was clear for everyone. So Etsy falls really well into my example. So we have our triple bottoms, we have our inverse head and shoulders, we have our rounded bottoms, so on and so forth. You guys get the idea. Okay, statistics for our patterns. There's a couple of trading websites that you guys can check out, but the first one that I like the most is going to be the tradingcenter.org. So actually, we'll jump into this real quick. I think this is worth our time. If you check out this website, this is the website where it's going to show you some of the statistics overall for your trading. So you have your technical analysis, you have some of the patterns that we're talking about today, and you're going to see exactly statistically how well these patterns hold up for longer periods of time frame. So the tradingcenter.org, this is a pretty good website and one that I visit quite often myself. There's quite a bit of articles in terms of indicators that you can use if you are an indicator junkie, which I am a little bit myself, but nonetheless, this talks about a lot of the trading concepts and a lot of the patterns that we have here. I will tell you off the bat, if you do a little bit of research, the head and shoulders pattern and also the rounded bottoms and rounded tops seem to be probably the best indicators for either your medium time frame or longer time frames in order for you to initiate your position. On top of that, bullish or bearish engulfing, and then across on the VWAP, it doesn't matter what time frame. Let's go back to the slides here. Okay, trades that I'm in right now. So I'm in a trade right now on UNG. I talked about this last presentation, but UNG for me is close to a demand level right here. So that's one example of where we're trading into a demand level. We don't exactly have the same engulfing that we have on Etsy. We'll see how this trade plays out. there's a couple of extenuating factors on UNG. Another trade that I did take long right now is Rivian. I'll explain as to why I took Rivian long. It has a little bit more to do with order option flow aside from just the confirmations that we have here. But I think that this is very close to what I would call a pretty decently highly probabilistic setup. And then lastly, this is the Tesla trade that I took. I've already showed you guys just a couple minutes before. This was a falling wedge. This is one where I was looking for it to drop the floor. So there's a couple of words or terminologies that you can use here. Dropping the floor, giving up the neckline, giving up the demand level. It did it. It definitely did it. And the more momentum that we saw going into that zone, the more I had confirmation that it would definitively break that zone, aside from everything else that we were getting out of China and the recall that they just had here last week of 2 million vehicles. So all of that was going negatively for Tesla. All right, so how do you create an actual action plan so you can execute? Let's talk about just a couple of trades here. We're going to do 3. This won't take me too long, but this is going to be worth at least sitting in for the next 5 minutes. So as I'm looking to take trades, I always like to talk about trades that I've either taken or that I have been in or that I have been successful in or non-successful in. So we're going to be talking about specifically SPY and also QQQ. So what did I see on SPY on Friday? First of all, we had a drop based on a specific factor. It was a news factor. It was the jobs report. So if you're following along with me, if you have extra screens like myself, if we're looking at just some of the larger or medium timeframes, this is where I'm normally looking to live if we're looking to trade into a more specific structure. So the 3 things that I want you to pay attention to that are going to flow into some of our high probability setups. I'm really going to talk about only 3, right? Because most of you mentioned that you're looking only for 2, maybe even 3. So some of you are not as crazy as I am looking at 5, 6, or 7. So first things first. I'm looking at what price action is telling me. If I'm looking at the overall trend on some of the larger timeframes, I think it's safe to say the trend is overall up, right? And we're up not just on just price action and fluff. We're up on some volume, I would say. So there's some consistent volume here on the daily time frame, but normally we're not looking at daily if we're looking to take a scalp position. But what I'm doing is I'm looking at the 1 hour time frame and I'm looking to trade into a specific structure. When you're hitting all-time high levels, and this is a perfect example because it's ambiguous, it's very ambiguous. When you're hitting a specific all-time high levels, then what you're going to use as a point of reference is you can use your Fibonacci levels, which we've talked about, which a fib is going to line up at 497 quite nicely here on SPY, and it's also going to take us all the way up to 500. But nonetheless, I'm not going to throw that on here. I don't want to confuse you guys. We have a rejection area, and it's very clear. It's here at 495. So probably the most important levels that I'm just going to be paying attention to is the midline here, the midline between where we saw the most recent trough to the most recent peak. So that midline is going to put us roughly at around 489, excuse me. So these are just the 3 potential levels that I have already sought out for myself on the larger time frames. Now, why did I want to take a long position on Friday? For you guys that are in the Discord group, I mentioned this very clearly. I wanted to take longs on Microsoft, AMD, Apple, not so much. Amazon, we played earnings on, but I also wanted to take longs on SPY and Q. Why did I want to do that? If we're jumping in on the shorter time frames, we already have a sense of where we can trade into on the 1 hour. We can trade all the way up to the 495 area and then start seeing further breakout and continuation. So we got that down pat, or we can trade all the way to a bounce area that we saw here at 489.25. All right, so we're right here. Now, if we're now starting to jump in on the shorter time frames, I'm usually going to use the 15-minute time frame as a specific area of reference. Why did I have the 489.25 level? First of all, this is an area where we started jumping from after we saw earnings for Meta and also after we saw earnings for Amazon. So this is a peak level of interest. Not only did we start pulling back on these levels, this was a potential level for an entry. If you are a VWAP trader, the way that the VWAP works, it's going to take volume and price as its consideration, and it's not as laggy as some of the other RSI and also some of the other MACD indicators. So as a point of reference, it's not that you're always going to hit exactly the bottom or exactly the top on specific trades. I definitely did not. I took this trade right at open, roughly at about 480, excuse me, I keep on messing that number up, 489.60-ish, and I rode this to right about this candle right here. I was already good with my profit, right? So we got in at $1.80, and I think we got out for $2.50, $2.60. I can't exactly remember. So on the larger time frame, when we're looking at this, we have a better sense after time goes by exactly where it traded. Obviously, that's self-evident. But when we're starting to jump in on where we actually take our entries, there's a couple of things that you guys wanted to note. Not only do we have an interesting level where our static VWAP is here, this would be considered I would consider it a pretty strong demand level. Why is it a demand level? Because we jumped from this level using pre-market data, and then we started sinking to this level again. Now, what am I going to use as additional factors on this, whether I want to decide to take a long or a short position? You can't do that so much on the 15-minute time frame, but this has everything to do with looking for your high probability setups. So let's jump here into the 5-minute time frame. This is a level that I had for myself, but I also mentioned when I was on live that I also had this level down here at $487.50. Now, why did I have that? Not only did we take off from this level, but this was a point where SPY did see some buyers step in or did see some algos trigger as well, right? So what is the pattern that we're looking to trade into? This is not a head and shoulders pattern. This is not a rising. It's nothing like that. It's just trading off of your resistance, supply, demand levels. So we have a couple of them here. Whenever you're looking to trade your supply or demand levels, you're looking to trade into where you took off from in the first place. And this is a little bit easier when you're backpedaling or retracing into some levels, right? This has a lot to do with Fibonacci sequences. Remember, I can't give you the entire playbook here. I don't have enough time to do that. But for what it's worth, when we're looking to retrace back into a zone, you're always looking to trace back into pockets where we recently took off from, okay? So this is very important. Now, what else am I going to use on top of this as a factor that I want to take either a long or a short position? This is going to be the VWAP. So whenever you're looking to either kiss the VWAP, break below it, or maybe find some sort of leg or support on the VWAP, what's going to be another factor that you want to take for yourself to determine whether you want to take a long position or a short position is going to be that candle. So this candle, in my personal interpretation, when I saw this candle right here, I kind of knew that I wanted to maybe take a long position. So we again, we don't have time to talk about this in this video, but for SPY, the way that I use this or the way that I had my confirmation that I wanted to take my long position is more news-based and more what other stocks were doing at the time. So if we're looking more so, Microsoft was my factor. Microsoft was 100% my factor on taking the long position. When I saw the engulfing candle, and this, I was so pissed that I didn't take this position. But when I saw the engulfing candle here on Microsoft, right it open with the volume that we saw bouncing off the VWAP, that's 3 forms of confluence that I used for myself to determine that I wanted to take a long position on SPY. So this for me was a little bit, I would say a pretty B plus, if not an A setup here to take a long position. Now, how would I evade myself from a losing position if I did take this long? Well, I would have set my stop loss right below that candle, or maybe give it a little bit more breathing room. But what I use for confirmation is not right it open, not at all. What I used for my confirmation was the kiss on top of the VWAP. And from there, I looked at the candle, and that candle for me was excuse me, was the confirmation that I wanted to put on a long position. So after I rode that, I kept on moving up my stop losses, which is what you guys are doing. I rolled that position, and I was just looking for us to kiss the previous high that we saw pre-market, which is exactly what we did. So I took this position off for a gain at that point in time. So why is this a high probability setup? It's a high probability setup because, first of all, we had some engulfing candles pulling us lower, but we were trading into what we call a very, very strong structured zone. So the structure zone is right here. It's already a level where we started taking off from. This was a previous resistance level, and we just broke above it with a very, very strong engulfing candle to start off. So trading back into the zone, not only do we have stop losses that might be triggered and have a cascading effect lower, that didn't necessarily happen here. So I used a couple of extenuating circumstances, mainly Microsoft, and a little bit of what NVIDIA was doing in order to determine whether I wanted to take this long or short. So if we add an additional layer on top of this, I know I'm spending a lot of time on SPY. I'll get to one more chart and then we'll be done. But if I'm using just overall metrics of levels, supply and demand levels, this would have been one of those levels. Now, you might be thinking, hey, Sage, what if we started breaking below this level? Now you have a losing trade. You're absolutely correct. Then what I would do is I would wait for the level a little bit lower, closer to $487.50, which I outlined on live. And from there, we would have traded below our VWAP. The lower we are on the VWAP and the closer we are getting to, I would call a structured level, that's normally where I'm looking to pay attention for some sort of reversal trade. Now, what am I using in terms of confirmation in order for me to take either a long or a short position if we're reaching that metric? In my opinion, it's always going to be the engulfing candle and the fact that we're trading, or at least starting to cross the 0 line on the VWAP. Because at this point in time, we can start cascading over with a little bit of momentum. So this doesn't have too much to do with patterns. We don't want to always look at patterns on the shorter time frames. We want to do so more on the medium time frames. But this is a pretty good example of what we do day in and day out in the Discord group. We're using our VWAP and we're using these structured levels in order for us to have a very mechanical way for us to look and operate the trade on. So how would I set my stop loss here and limit my overall risk? The way that I would do that is I would set my stop loss here and then I would wait for my entry down the road as long as I'm getting volume coming in and as long as I'm low enough on my VWAP where I'm looking for my bullish engulfing candle and looking to try again at that point in time. We use a whole bunch of different indicators in our group as well. We use something called snow lines, fire lines. Some of us use Bollinger Bands. Some of us are using some pretty convoluted trading strategy, PMZ, fair volume gap. There's a whole slew of them. But if you want to simplify the process, you want to focus on exactly what we talked about today. You want to focus on your VWAP crosses and you want to focus on trading into your structures on your larger time frames. So now let's actually look at this, not so much on the 1 hour, but more so on the 30-minute time frame. I get excited talking about this, guys. So pardon me, I'm just losing my breath here a little bit. But when we're looking at larger time frames, now we have to get a little bit more of the story here, right? So if you're not in a position at open, if you're not holding positions overnight, for me, what I would look for is some of these levels that I've already mentioned, right? So we started selling off right here, but I would look for a retest down at about $489.25, a previous point where we jumped off from. And then if we do not hold this level, then I'm just waiting for price action to tell me what to do. I'm not looking to chase price action or be preemptive. I'm actually looking for the candles to start showing me what direction do we want to go in. And as long as we're starting to see candles move in a specific direction, the height of the candle is really going to determine what direction we're probably looking to go in terms of momentum. And then another extenuating factor that we can add on top of that is going to be your volume. So volume and also price, right? So if we're looking to trade into some of these zones, I'm going to outline them for you real quick. And then we'll go into one other example. And that will be it for today for examples. But this would be a zone for me. And then this right down here would also be a zone for me. So what we're doing, especially in the Discord group, we're not looking to take some very, very arbitrary sort of levels and try to shoot the shot here and try to throw as many trades at the wall as humanly possible. We're not doing that. We're looking to see where we are in reference of the VWAP and looking to see if we're starting to see weakness on this, then we can probably look to take a short trade. In my opinion, I'm just going to throw this out here. On more so the 30-minute time frame, some of you might be saying, hey, all this stuff that you're throwing at us right now, I might be seeing a head and shoulders pattern here on the 30-minute or 1 hour time frame. I'm on the 15-minute, excuse me. I might be seeing a head and shoulders pattern here on the 15-minute time frame. What do you say to that, Sage? I say that, yeah, you're starting to look at patterns and starting to recognize some of the stuff that isn't necessarily thrown at you here. So yes, if you do take a short entry, for me, it's going to be breaking roughly around this area right here at 493.50-ish, and then starting to target roughly at about 492.50 if you want to look for a scalp position, but more so around this level right here where you're looking for your retracement. So retracements have more to do with fibs. Again, I don't have too much time to get into it, but you guys are starting to see that I'm looking at a chart and I'm identifying these levels as opposed to just looking at it and throwing stuff at the board, taking long or short positions based off of no technical analysis whatsoever. So your point of reference here, guys, is going to be where you're trading in reference to your VWAP, where you are on your supply and demand levels, which is the primary thing that we use on any time frame. It doesn't matter if you're on the 1 or the 5-minute, 1 hour weekly time frame, and where you are in reference to volume. Volume is absolutely everything in trading. Where you have a large amount of volume, that's normally denoted with a good amount of interest, either to the long side or to the short side. Okay, so that's how we go about analyzing these overall positions. I'm going to do one more trade. I'm going to do QQQ. QQQ is kind of easy. QQQ had very similar price action, but pulling out on larger time frames. If you are a more experienced trader, what you're doing is you're taking the 50,000 foot view approach, and then you're starting to scale in. So I'm going to show you what that looks like here on Qs. If I'm looking at the Qs time frame, I have resistance here, and some of you are already thinking, dude, I'm looking at a triple, maybe quadruple top there, and you're absolutely correct. I love the fact that some of you are thinking that, even though I can't really tell if you are or not. So we'll leave it at that. But if we have this this quadruple top right here, what's going to gauge my overall opinion if we're going to break it or not? It's going to be where we are in reference to the VWAP. So if I do want to take a long position here, obviously we have to wait for market open on Monday. But dependent on how we break above here, I want to chase this trade all the way up to about the $430 level. So where are we in reference to the VWAP? We're pretty much right on top of it on the 2-hour. Let's see where we are on the 10-minute. We're pretty much right on top of it as well, right? So we started giving up these levels, but we haven't broken below the VWAP quite yet. So if you do have a long biased opinion, I probably would not take this long here. What I would do is I would take this long at one of the structure areas that we've just talked about. I will throw this in here. You will never, ever hit a level absolutely perfectly and then bounce off or break below that level with absolute certainty. It doesn't exist in the market. It would be I would be a billionaire if that was the case. It's not that case. What you want to do is you just want to set these target areas. So when you hit that target area, if you are hitting it and you are starting to see some of the factors that we talked about today, what's going to determine whether you take that directional bias or not is going to be the reaction based off your candle and how much volume you have reacting in that zone. So for me, if I do take a long position, some of you might take the breakout here at 430. That's fine to do. That's also perfectly acceptable. I would prefer to wait on a pullback here at 425.25. And if we start reacting off this zone, especially if we're lower on the VWAP and we're getting some engulfing candles, that's where I'm looking at a plan of attack. And that would be more of a high probability setup. The reason why it would be more high probability is because you have more room to the upside or downside if you're looking to take the inverse of this. You have more room to gallop on your position where you're setting yourself up for a change of a shift of momentum. And that's what high probability trading setups are all about. So our focus here is where we're trading in reference to where the VWAP is and how much volume is coming in per any specific candle. You guys don't need to answer this. You can if you want to in the comment section. But if we give up this $425.25 level, where would be our other reference point? For me, that's going to be all the way down here at 423.25. So that would be my additional reference point. And then below that, this is why I have all these horizontal lines here on my chart. We're always looking at where we hit a specific level on the abyss of the chart and seeing why we had to change a direction. And we're going to use that as a point of reference as well. There's a lot more to this. I know a lot of SMC guys are also thinking this is sort of anchor weighted levels that you can use as well. These are some sweep levels, some imbalance levels. I get all that. I totally understand. But if we're looking at this from a beginning standpoint to simplify the overall process, we're just going to use these points of references as potential target areas to catch the reversal or catch a directional move on the stock. And it doesn't matter what stock it is. Obviously, the more liquid the stock is, the better it is. So the majority of you are probably not trading Peloton. So I'm glad that that's not the case. If you're focusing on the indexes, you're already at home base. You really don't have to focus on too many other things. But here, if I'm looking to take a long position, especially if we're nicely oversold on our VWAP, then I'm just waiting for this to tire out and show me those signs via bullish engulfing, bearish engulfing, trading into structured patterns. That's what I got here, guys. That's what I got. Okay, let's go back to the slides. All right, we just jumped into the charts, so we really don't have to do this. This is what we do on a consistent basis, day in and day out, right? So what we're always doing is we're looking at different chart patterns and we're starting to look at where we are in reference to our VWAP, where we are in reference to our volume. And I'm going to add an additional element to this. It's not part of the slides, but when I'm looking at chart patterns and when I'm looking at technical analysis, I'm going to add just one more element on top of this. This is more for my, I would say, more advanced traders. We're looking at all these potential entries on the shorter time frames. Like Microsoft had the most beautiful entry here at 395. I can't believe I missed this too. I'm pissed off at this. But anyway, we're looking at some of the larger time frames, and then we're pulling out, and then we're starting to try to identify some of the patterns that we talked about in the earlier part of the slides, and we're trying to see if they are laying out on the overall chart. Right. So we're looking for our head and shoulders pattern. We're looking for our engulfing patterns. And the more volume we have on the larger time frames, let me remove that data. The more volume we have on some of the larger time frames, i.e. the 2-hour, 4-hour, and mainly the daily time frame, that's normally where I'm looking to take a position via that direction. Now, another element on top of this, even past the larger timeframes, is order option flow. So I use something called TradyTix. TradyTix is going to give me the order option flow of what's generally going on in the market. So this is not going to be any surprise, but Meta has had a large amount of bullish flow here for Friday. I took my long position on Meta. I think it hits $500, so on and so forth. But what I'm looking for is starting to trade into these patterns, into these structure zones, and starting to see if there's any dark pool data or if there are any larger institutional traders starting to put their longs or their shorts on these given positions. I'll give you guys an example of why it is that I took that Etsy trade. And then we'll go back to the slides here real quick because I'm running out of time. I told you I can talk about this for 6 hours, guys, and it's my absolute pleasure to do so. but hopefully you guys got something out of this presentation. I really, really hope some of you did. So let's go to Etsy. All right, so we have some bearish flow here, right? And then we have split down the middle, calls and puts. So this is exactly split down the middle. We had a nice amount of positive volume that came in, but what specifically I'm looking for now, this is just part of what I'm looking at, is I'm looking at different expiration cycles. So I'm trying to determine whether there's going to be a high amount of concentration for either calls or puts in one direction or the other. Again, I am an intraday and day trader as well, but this is where I like to put the bulk of my cash. So I have a couple $1,000s in Etsy. I don't know if it will win or not, but ultimately that 75 strike to me looks fairly attractive. Now, if I'm going out into March expiration, we have a high concentration for that 80 call. Again, this is not financial advice. I'm not telling you to go out and purchase Etsy and put $1 million down on this. I'm just trying to show you how it is that I interpret data and seeing what accumulation that I have for a specific strike. And then on top of that, everything that we talked about, this has everything to do with confluence, everyone. So everything that we talked about in terms of levels, in terms of VWAP, in terms of volume, in terms of chart patterns, we're jumping on the Etsy chart, and then we're trying to determine, do we have a triple bottom here? Do we have some engulfing patterns here? Do we have some volume that's coming in? Do we have long orders that are coming in longer term? All this is what we do on a consistent basis in our Discord group. And more so ever, this is what our alpha program is all about. So I want to talk to you guys now about the alpha program and explain exactly what it is that we do, what my responsibility is in the alpha program, and how it can benefit you guys. Because this is, again, what we do all day long. I do this on probably 5 to 7 chart patterns every single day. So let's go back here to the slides. And this is what we kind of want to ask you here, right? Without taking up too much of your time, guys. This is, I would say, a pretty high, if not the highest income skill that you can possibly learn, right? Aside from maybe programming or aside from running a business, right? So a high income skill is something that not everyone can do, and not everyone has allocated the same amount of time for them to learn. But I would definitely say that trading is, if not one of the most difficult, probably the most difficult thing for us to attenuate our emotions on. The reason why is trading is not something that's tangible. You can't really hold your trading skills. You can only show it off. And if you have a bad day, or let's say you're not emotionally capable for a specific time period, you can pretty much blow your account up. However, what we want to try to offer to you guys today is a program where you're literally sitting behind not a $14 billion, because I did that for my trading sessions, right? So I have a pretty level head when it comes to swaying some cash in the market. But what we want to do is we want to surround you guys by people, not only myself, not only Shafi that's now trading. I believe Shafi is at $950,000. You're trading around people that not only do we have the emotional discipline to sustain this long term, we have the numbers to back it up. If y'all didn't recognize this, Shafi returned more than 200% last year for the stock market. Stock market was phenomenal last year, but his numbers were incredible. Mine, not so much. I didn't necessarily agree with the AI boom, but now I'm sort of on the bandwagon. But nonetheless, the numbers are there, guys. So our question to you is not is if you can afford a high income skill, is if you can afford not to learn one, right? So whether it's business, whether if you're getting into the computing field, whether you're learning programming, whatsoever, I think that trading is something that every single person, at least for the long term, needs to learn and have under their tool belt in order for them to analyze charts and analyze their investments. So a traditional graduate degree right now is going to run you more than $100,000, right? And the average rent in the United States, I'm paying right now, it's more than $2,000 for my particular month over month. It's quite high, and we all realize this, right? We're all watching the presentation, and we all realize the fact that, damn, man, things are expensive. I go to Whole Foods, and I spend $300-400 for my groceries, and it feels like every time that I go, it's just less and less groceries overall. So these are factors that are ultimately affecting us incredibly, incredibly strongly for our bottom lines, and I'm sure all of us feel stressed out. I know even though I do have this high income skill, I do have a successful business, I complain to my wife all the time, dude. We need to always think about different revenue streams for us. And trading not only has it provided that for me, it is a little bit stressful. We're not going to lie that, you will incur some stress with trading, but it is something that at the least, you need to know how to evaluate stocks in order for you to capitalize on opportunities, right? So the people, just think about this, guys. This is just something I'll throw out here. For the people that were engaged in the overall stock market and felt the AI boom, and they were talking about this being the next internet boom, maybe even bigger than that, how much money do you think these people made last year with the AI boom when Qs were trading at 350? Some of them, you made millionaires literally in the last 6 months. So it's not the fact that if you can afford maybe being part of a program where we're teaching you how to trade longer term. It's the fact that can you afford not to be part of these opportunities and at least be engaged with the overall market? So that's the question that we want to ask you guys. And the average income here in the United States, I researched this before jumping in here on the chat. It looks like it was $34,000. I actually thought it was a little bit less. But for the prices of what everything is, the average home here in the United States is running anywhere between $320,000 to about $420,000. We can't afford to just work at a $34,000 job and expect that we're going to be taken care of in the next 10 years. It's not in the cards any longer. So we cannot afford not to have a high income skill, at least knowing what you can to position yourself in order for you to capitalize on some pretty massive gains, which we saw here for 2023. So I want to talk to you guys about the Alpha program here. These are some of the things that we introduce into the Alpha program. You have a 90-day program designed to enhance your trading skills. You can either pick a mentor. Your mentor could either be myself, Shafi, or Nick. We all have different personalities, but I will tell you this, all of us are highly, highly invested in your success, not only after the 90-day program, but for life. You're part of the Alpha program, you're part of the family, and you're also part of the high net worth individual. Excuse me, man, I talk too fast. You're part of the high network individuals that we have here for long term, right? So we started the Alpha program, I believe, over 2 years ago, and we still have the same people that started 2 years ago, still part of the Alpha program, still making money, still giving the recommendations. And this is really the cool part. I think this is the coolest part about the Alpha program. You're not just listening to the 3 traders, but you're listening to the other high net worth individuals that we have in the program. That for me would be a given, right? Just getting some recommendations and things that we throw out there for longer term trades for me is already worth it, right? Trading psychology and expertise. I have a pretty strong basis of trading psychology because I've been in situations where I literally have been down $50,000 on a scalp position because I'm an idiot, right? So we don't do that. We don't want you to lose $50,000 in a trade, whether you're trading with 10 million, 100 million, it doesn't matter. We're going to teach you how to risk manage your stuff so you can actually sleep at night, right? So this is what we want to do in terms of introducing the overall trading psychology into the space. And if that's not enough, our CEO is actually a trading psychology expert. No fluff there. She actually is. And she helps out not only our students, but also our traders when we're feeling down. I've gotten on a numerous amount of calls with our CEO just talking about my own trading psychology. So it's an invaluable thing that we have here at High Strike. Comprehensive education, access to over 72 hours of lessons and trading strategies. This number is incorrect. It's over 100 hours now because we're constantly adding to the overall library. Live trading sessions weekly. We do this for Tuesdays and Thursdays. We have our lessons, and then we also have our live trading sessions, and we alternate throughout the month. And each month we have different subjects that we talk about. Last month, I forget what we talked about last month. It's building a trading strategy, or is that this month? I can't remember. But every month we have a specific designated category that we're going to designate for our traders so we can concentrate on exactly that subject. Personalized coaching monthly one-to-one sessions. So we advertise 3 sessions. If you pick me as a mentor, I'm going to get in trouble for this, but you can do more than 3 one-on-one sessions with me if you pick me. I do as many as you like because for me, it's all about your success. I don't care if it's going to take up a little bit of my time. It doesn't really matter. If you guys have success within the program, not only will you make money, but you're just overall going to benefit from the skill set that you will learn here. And we're not talking about making $5,000, $10,000 just one off, right? We want that to be a consistent thing. I know many of you have seen me. Sage made $50,000 today. All right, cool. It's just another Tuesday, right? Because it's just becomes something consistent. It's just becomes something that's normalized. It's like you guys getting a paycheck, right? We don't jump and holler when we get our $700,000 paycheck at the end of the month or the end of the week, whatever it is, because it's normalized. It's the same thing with trading after you start to develop the skill and the emotional maturity. Exclusive community. We share things in that community that we don't share anywhere else. So that's a plus for us as well. Analysis support, continue access to analysis for questions and strategy discussions. This we do have in the Discord group. It's amplified 10 times over, I would say, in the Alpha program because we literally sit down with you and we analyze your portfolio and what the hell it is that you're doing incorrectly. Next thing is you have some eligibility criteria. This is a pretty important little metric here. We say this with the kindest possible words as humanly possible, but we don't want people that are trying to get in the program and make as much money as humanly possible. The reason why we don't necessarily strive for that mentality is because we don't want people that are trying to make tens of thousands of dollars as quickly as possible and not focus on the actual maturity that it takes in order for you to be successful. It's kind of like this, guys. Imagine you are running a business and then you have a get rich quick scheme guy that is a salesperson and he's a very hyped up salesperson, but he has absolutely no focus in progressing your business. You probably don't want to hire that person. We're kind of in the same boat. We want people that are actually focused on learning and implementing the strategies correctly so they can do this not just long term, but literally forever. I will be trading until I'm 85 or till I drop dead, literally, because it's something not only do I enjoy, but it's incredibly lucrative. Highly, highly lucrative. It has its ups and downs. We're not going to say that it doesn't. It definitely does. There's months where I'm down a house, basically. If not a house, maybe a house out in Iowa or something like that. So there's months where it's not that great. But the fact that you understand how it is that you make money, that is literally the difference between you being broke for the rest of your life or you being a potential future millionaire sometime somewhere down the road. And we're not exaggerating with that claim at all. We have two people that I know that are in the Alpha program that literally quit. We have one that quit roughly about 3 weeks ago, and then we have another that quit. He was just in Costa Rica sending me pictures of the time he was spending with his wife. This is part of the program. This is the deal. This is what we're offering to you guys. And then we're also going to slap our label here, master consistency in your trading, and then scale your account. Learn basic and also advanced strategies from our 7-figure traders. We now have 2 of them, right? So Shafi is maybe about $40,000 away from that. But this is what we're offering you guys, okay? This is our Alpha program. It's something that I am incredibly excited about. Not only do we get to work with people that are really, really focused on doing this more longer term. We're dealing with serious people. We're dealing with high net worth individuals that really, really take their money seriously, and they're not throwing it off to the wayside because they lost $1,000 and then they give up. We don't like people like that. We don't like people that give up easily. We like people that are grinders, and grinders usually do quite well when they're sticking it out in the stock market because they're learning how to identify opportunities. All right, let's go here to the next slide. I'll hang out here for a little bit. This is the entirety of my presentation. Hopefully, this is just my parting words. I'm going to hang out here for a little bit, but these are just my parting words for you guys. Hopefully, you got something out of this presentation. Hopefully, I didn't yell at you guys or said anything to deter you from trading longer term. I absolutely adore trading. Trading is my #1 gig, right? It makes a lot more money than my construction business. I like doing that because I also don't like sitting at the computer for 24 hours a day. So I have a little bit of give and take here. If you learn the high income skill, if you learn how to do high income skills, not only for trading, but also for maybe business minded people somewhere down the road, not only are you building networks with people that also are like-minded, but you have a high network skill that is literally in your back pocket. And really the sky's the limit here. There is a point where if you get to 50, $100 million, it's a little bit more difficult for you to have a footprint in the market. I don't think we're at there quite yet. We had one individual that was trading with $8 or $9 million. But that was a while ago. That was actually before me. But this is sort of the realm what we're talking about here. We're talking about offering you an opportunity not only for you to jump into our program, but be part of a community, my man. So that's the most important thing here that I want to offer. I learned this early on in my career. I was a dummy doing this for the first 4 years of my career. I wanted to trade alone, and I thought that I was the smartest fish in the pond. It doesn't work that way. You want to be part of a community that you're sharing your ideas and you're attacking the market in a flank situation. You want to be like in a 300 situation. That's what I think about when I think about this. You want to be in a situation where you're working with people that are also incredibly clever because you're not going to be able to find everything in the market by yourself, right? And that's what we're offering with the Alpha program. So hopefully you guys learned something here. I'm going to hang out here for a couple of questions. I didn't take too long today, so I wanted to be respectful of your guys' time. So I'll hang out here for a couple minutes, but if anyone has any questions, lay it on me now. Oh, and also thank you for your time, guys. I'm gonna be here for a couple minutes just answering questions, and then I'll talk about some trades that I like for 2024. You guys already have like 2 or 3 of them that I like. I will give you my recommendation for my books. So give me a second. You're going to see the back of my head. All right. So these are the 2 books that I would recommend. It's going to cost you about $60. It is worth every single penny. The Psychology of Money. Can everyone see this? The Psychology of Money is a $12 book. It will reprogram you of how you think about capital in general. I know a lot of us have read Rich Dad, Poor Dad. I'm sure a lot of you have read that book. That book for me is the corniest but most revolutionary book that I have ever read. I read it when I was like 12 years old. But it actually, no, about 13 going on 14. But that book also is revolutionary, especially if you're a younger cat. If you're above 22, 23 years old, if you do not have this on your bookshelf, you need to buy it right right now. If there was less people on this call, I would probably buy it for every single one of you. But this book is invaluable. It teaches you how to think about your overall capital. It gives you a lot of examples from history. It's just a book that you need to have. Also, another thing, I didn't get in trouble for this last time I did the webinar, but I'm going to recommend a competitor's book. So this guy is a competitor of ours, but I don't care. His information is invaluable. So this is right here, Mastering the Trade. This is the 3rd edition. This book will run you, if you buy it full price, $75, but you can get it off Amazon for like $44 or $45. He talks about the squeeze strategy, which I did not have time to talk about today, or else I'd be here for 3.5 hours. But Mastering the Trade is John is the author of this trade, and he writes the book in first person. I would say that this is probably one of the, if not the most important book that I've ever read on the subject of trading. There's a couple of other ones as well, but you want to focus more on psychology of trading, and he does talk about setups as well. But this guy right here knows what he's doing. He makes some pretty big trades, and I myself look at him as a mentor, right? So I'm not ashamed to say this at all. I don't have all the answers, and nor does anyone in the market. But you want to trade with some big fish. You want to trade with some people that are actually doing this and that are, putting the numbers on the board and doing so successfully and not being assholes about it. Excuse my French, guys. But this is the guy. This is the book. $45. This is going to run you roughly about $60. If you guys already have this book, right on, right? But if you don't, spend the $60 for the love of God and learn something reading these books for the next month. So that's everyone's homework. All right. What other questions do we have from you guys? I love the fact that you guys are engaging and asking questions here. So it looks like Nathan has been doing some of the homework for me. But thank you. Let's see. One-on-one schedules at the time that works for you. Live team calls. All right. So that's Nate answering. So we got our recommended books. Will you be recording? So it's going to be up. Cool. All right. So the alpha price is going to be 5K, guys. So that's the alpha price. I'm giving it to you guys straight. 5K. You think about it, if you learn a high income skill at 5K and then you make that money back, 5K doesn't seem like a large amount of capital in my personal opinion. I spent $14,000 last month, actually early December, on learning some new things that I want for my business. So depending on where you are in life, it might be a lot of capital, it might be nothing, it might be a drop in the ocean. That's why we have what we call our entry criteria. We don't want you to jump into the program and have you be unsuccessful. We say this quite often. We don't want your money. We want your dedication. We want the fact that you're going to be grinding with us and you're going to literally learn how to do something. Because to be perfectly honest, this is more, I've never been in the armed forces or anything. I was recruited to go into the Navy, but I actually decided to go to college. True story. I have the mentality where the guy that's next to me, I don't want that guy to be, or that girl, I don't want that person to be inexperienced. I don't want that person to, not have my back. It's the same thing here with our Discord group. We don't want you to feel like we don't have your back. So if you're that kind of person where you're kind of on edge of thinking whether you want to join the group, whether you want to be part of the program or not, just think about it like this. The people that are trying to teach you how to trade, those are the guys that are actually on the battlefield. And those are the guys that are trading every single day. And we're doing this for several hours a day. And we have some success stories to back up our claims and some of the numbers to do so as well. So in my opinion, I probably want to trade behind those kinds of guys, not the guys that have the Ferraris and all the, nice looking girls on Instagram. I want to trade with the guys that are on the actual market, talking about economics and talking about why things are moving the way that they're moving, rather than the Lamborghini guy. Lamborghini guy is cool. It's great. I don't know how much value he can provide for you for the long term. And of course, we don't know the validity of some of those statements that are being made. So that's what we're offering. And this is sort of the mentality that we have here at High Strike. So thank you for asking that question. Holy crap, we got a lot of messages. What's your take on love? 315. I'll give you my take. I took Save Shares. I took it at $4.65. Some of you guys might be in the Discord group and remember this. All right, so love. I like Boeing a little bit better. Love would have been, check this out. Love would have been an entry right at this breakout right here. Do you guys see that? So we broke and we hit above the VWAP, and then we started seeing some continuation. I don't love this trade here. I would prefer a retest down here, a retest down to about $28 before I start enacting a position on it. It's a little iffy on the space here for airlines. Boeing was a little bit better. I took off my Boeing trade for a loss, and I was pissed about it. But I took off my Boeing trade when we started breaking below $200 and then it jumped for earnings. I will look to get back into Boeing if we start trading down to about $190. Thank you for your question. Is the book relatively close to The Mental Game of Trading? No, it's not. That book is a little bit different. Some of you might be aware of the Mark. Is it Mark? It's Mark Douglas. He has a book that everyone, absolutely every single, you know what? Let's jump onto Amazon, guys. Take out your notebooks, please. Let's go to Amazon. I'm going to share it with you guys a couple books because I have 400 books here in my bookshelf and it's going to be hard for me to pull them out. Please don't notice the stuff that my wife buys here on Amazon, but she's laughing here off to my side. All right. How to Day Trade for a Living. This is a very, very good book. Also very highly rated. This is a pretty decent book and definitely worth the price. And we also have Trading in the Zone. This is more a mentality book. I would say that this is a pretty invaluable book as well. So everyone references this book, especially John. John, when he started trading 30 or 25 years ago, he references this book quite a bit for just his mental capacity. So this is a book that I would recommend. It looks like you can get it for free on Audible. Another book that I really, really like, it has to do with volume analysis. This book I actually recommended to one of our alpha members. I bought her this book. And I'm okay with doing things like that. I only care about your guys' success, and the other traders feel the same way. So I bought her a couple books, and this was one of them. This one is a pretty good one. So this has to do with the volume profile. So this is this right here. We didn't talk too much about the volume profile here because again, I would be here for an hour and a half. But volume profile analysis is going to give you where the highest amount of accumulation was for a specific price point. So if we're trading on that volume, we call this a shelf, and then we call this a gap. So depending on where the shelf is relative to all the other indicators that we talked about today, it's going to give me some sort of indication if we're looking to hold that level or not. And this book is all about that. So I don't want to recommend too many books to you guys because you guys are going to say then, I'm affiliated with Amazon, which I don't want you to think that. But books are good. I would recommend spending about $150, $200 on some books, just so you guys can. Just so you guys have a reference point. Really, it's a matter of you getting the proper education so you guys can do this more confidently and not watching a 30-minute YouTube video and thinking that you can trade with the big boys that have been trading for 30, 40 years, right? You're not going to win against them if you're not as educated as they are. So hopefully that made sense, everyone. Oh, the indicator. Oh, I'm so sorry. All right, so that $700 indicator, thank you so much for reminding me. That $700 indicator, I paid $700 for this indicator right here. It is the main indicator that they use from ST. So this is called the Squeeze Pro. So what you're going to do is you're just going to put Squeeze Pro here. You're going to go to TTM Squeeze Pro, and this is by Beardy Fred, right? This has quite a few people that are using it. It is exactly, I need to upgrade my account, but this is the exact indicator. It's identical to the ST Squeeze Pro. I spent $700 on this indicator. You guys can get it for free. If anything else, this hour and 15 minutes that we spent together already saved you $700 on your TTM Squeeze or your Squeeze Pro, okay? So there you guys have it, right? This 100% was worth your time. If you go on the website, that's exactly what it costs, right? If you go to simplertrading.com, maybe you get it for a discounted $500, but nonetheless, it's there, guys. Thank you for reminding me. I do not work for High Strike and get paid by them. I promise you the skills you will learn will benefit. Thank you. Is there a program like Alpha for the traders only trading with a couple $100? There is the Discord group, and we also have the trading school. So the trading school is just the school. I don't remember the price. I think maybe Nathan answered the question already. I don't have a price for the trading school, but that would be more for you. In my personal opinion, if you have a couple $100, I'm just going to be really real with you guys. 100% real. Hopefully you don't take offense to this. You have a couple $100 or you're new to the game, spend some of your money on some education like the books that I just showed you, okay? Scrap together about $200, $300 and spend some time on your books and spend some time with paper trading. And what you want to do is you want to start to develop your memory muscle and you want to start to develop your overall knowledge. So if I'm throwing some terminology at you, if I throw like on balance volume at you, a lot of you are like, I don't even know what that means. Or if we're talking about order option flow, or I'm talking to you about implied volatility or the bell curve, if I'm talking to you about things like that and you don't know what that means, that's what the books are going to help you do. And there's a couple of YouTube channels. Rainer is a pretty good one. He has 3 million subscribers. he's a pretty good one for some of the stuff that we talked about today. I don't feel bad at all recommending information to you guys because, again, where we're from, we want to give you as much resources as humanly possible. So let's look at Rainer. Rainer Theo is his name. Is a pretty good channel for you guys to follow through with. So he has some pretty decent, not decent, he has some pretty amazing educational content. So spend a little bit of money on your education. Don't focus on just trading with $200, $300, $400, $500, especially if you're newer to the game. If you're a little bit newer, focus on getting your foot wet with some of the information, and then you can focus on really getting good with that account size. And then we can start scaling you into alpha. Payment plans, Nathan will take care of that. Anything worth in life has a price. I 1,000,000,000% agree with that. I'm I'm learning a new skill now. I'm learning a new high income skill. I'm learning how to program, and I spent a lot of money on some boot camps and some books for myself. I have quite a few of them. So even though I would say I'm pretty comfortable in life right now, I am always on that grind and always, looking to put invest money back in my business. So my business has done well, right? My trading business and also my construction business. They have paid me quite well. So I'm in a position where I can reinvest into my business. And that's what it is that we're offering. We're not here to say, hey, we're here to strip you of your cash and then leave you off to the side of the street. Nope. We're here to, you need to invest. You need to invest in what it is that you're doing. We're talking about a high income skill that can potentially make you a few thousand, if not hundreds of thousands of dollars, if not millions of dollars down the road, guys. So I price tag I think is pretty reasonable when we're looking at it in that sense. Any idea where SPY's headed Monday? Got myself stuck like a fool. That's hilarious. I have long positions. But I don't have it on SPY quite yet. In my opinion, based on the flow that we saw on Meta and Amazon, SPY's about to hit 497, if not $500 as soon as next week. I can't tell you where it's going to be on Monday, but I can tell you sort of in the shortish medium term, it's looking at 500, man. Also, can we get a recording of this webinar? There is some stuff I missed. Yes, you will get the recording after we're done. I'm loving the questions, guys, and I'm loving the participation. Thank you for this. Example of your watch list provided every morning, please. Yes, I can give you that. So I am not the person that's going to be giving you the watch list every morning, but I'll show you guys right here. So these are the watch lists that we give you guys. So I had watching Apple for a bounce around the $180 level. It seemed like it did bounce, AMD as well. And then indexes were getting a little bit pullback. And then we were just waiting after the jobs report. I said that I still had an overall bullish opinion. So what we do is we got on live as well. And we literally give you the signal as they're happening, because if we type it out, we can be a little bit late on the trade. So if we go to Apple real quick, let's just say Apple, right? So Apple, my target was 180. It hit 180 and bounced off 180. So that's what we do, right? That's our Discord group. And I'm not responsible for the watch list every morning. That's more Ben Chafee, but you get them every single morning, literally every single morning. And we give you a detailed analysis of what it is that we're looking at, so you're better prepared. So when we get on live, you're like, okay, I understand what it is that they're looking for and sort of the target areas that we have. So I jump in sometimes, but not every single day. But Chafee is on literally every single day. And this is the last day that I was on. I was looking for some bullish continuation. AMD actually hit 172.50. It didn't get down to 170. But yeah, we started pulling up on basically everything. Watching Microsoft for a bounce around the 402 area. I don't think it hit 402. I actually think it bounced before that. Let's see. Almost. So 402 is down here, right? So we had a bounce $1 above my 402 target. So $1.30, it seems like. But so you have an idea of what the Discord group is like. I have Tesla for investment. Any comments on that? I cannot give you any comments in terms of investments on Tesla at this given time. I can share with you levels though. So I can't tell you hold, buy. I can't do that. But I will tell you on daily time frame, I'm waiting for around this $172 pocket. For me, it trades a little bit lower. That recall on Tesla was no good. No good. I don't like Tesla for a long position quite yet. However, I do like a long position on Tesla when we start looking for the signs that we talked about in this presentation. We're looking for engulfing. We're looking at a trade above the VWAP, and we're looking for this to settle. I want to say 165, which probably your heart hurts in listening to that, because I don't know what your entry was, but it wasn't 165. So I'm waiting a little bit lower here, closer to 165, 170. Sage, don't forget TTM squeeze indicators. We got that. So thanks. What exactly is this? What's that expensive attendant him? Okay. Thoughts on the book? New Age. Okay. So how is the Alpha program for helpful for people outside the US? The Alpha program is going to teach you what to look for. So if you look for the right things, it doesn't matter what you're trading. The only thing that we ask you is you trade things that are liquid. That's it. That is literally it. So if you're jumping onto your charts, we have a liquidity rating here. So if you're looking at liquidity rating overall, this is how I use it here on Tasty Trade. You guys don't really have to worry too much about liquidity rating because you're trading tech anyway. But as long as it's fairly liquid, and it has a decent implied volatility and you know your correlation as it's related to SPY, then by all means, then you can trade it. So I'm going to throw a couple out there. You're looking at AMD, NVIDIA, Meta. You're looking at Netflix. Netflix was great too. Netflix, we took a long position and we caught the move upwards. So as long as you're trading things that are fairly liquid, you should be fine. You should be fine. How do you get added to the Discord? So Nathan, you got that. For those interested in Alpha, please fill out the form. Awesome. How okay? Outside the US, this is what I think I already answered your question. Alpha program is going to teach you how to identify opportunity. So it's I kind of equate it like this. I know a lot of you don't have English as your first language. We totally understand that. Actually, a lot of people in our Discord don't speak English at 100% capacity because it's their second or third language. We're not here to teach you how to trade SPY. We're here to teach you how to trade price action and trade opportunities. So whether you're trading Tata Motors or if you're trading, the Brazilian stock market, the South Korean stock market, it doesn't matter. We're teaching you how to identify opportunities so long as that they have liquidity. So it doesn't matter where you are. Obviously, the American stock market is the most liquid in the world, which is why it pulls everyone in. But doesn't matter if you're in Singapore, if you're, trading the German stock market, the French stock market, the Greek stock market, opportunity is abundant. It's all about recognizing the patterns and the structures, so on and so forth. Not a question. I did High Strike University 3 years ago. Best 60 cat I spent. Okay, cool. You felt my heart. Thanks, Sage. I don't know what that's in reference to. I don't know if it was the thing that I said there for the English speakers, non-English speakers, but cool. Does anyone have any additional questions here? We went over by 30 minutes. I just want to again preface this by saying I really appreciate your guys' time. Thank you for hanging out with me. Hopefully, you guys got something out of this. You guys got a $500 indicator out of this that a competitor of ours built, but I don't care. It's all a matter of you guys being successful long term. Amazon. Amazon, I said Amazon had a target of 170 and 175. So to me, Amazon is going to be hitting the $200 level here very, very soon. So if you look at the chart on the weekly time frame, which I'm going to try to jump into here, if you look at chart on weekly time frame, we've already hit my targets. I just took Amazon earnings. I don't know if you guys knew that, but I did well here on earnings. I made 95%, 99%. So we did well here. Why did we do well? AWS was phenomenal, right? That was the consensus going into earnings. And then, of course, Meta, absolutely pretty much almost the best company in the world right now. If not the best company, he's going to go down as one of the greatest CEOs of all time for what he did. It was absolutely phenomenal what he did. We're up here on volume. We're above the VWAP, and we're trading into some supply areas. We're looking to trade up into about this zone right here. I'd give this a little bit more room maybe to the downside, but I'm thinking that Amazon trades into about the $180 level here very, very shortly. Who is your broker? Do you use one platform for purchase for your Confluence? My broker is going to be Tasty Trade. They used to be Tastyworks, but I trade a Tasty Trade because the sheer volume of contracts that I take, it's limited. It's capped at $10 per leg. So I'm often taking $2, $3, $5, $10,000 positions. So if I take a position, it costs me $40, but I'm taking a $5 or a $10,000 trade. So what's it called? TOS is great. TOS is phenomenal because you can get your contracts down to 65 cents, which if you're scalping, it would be more beneficial for you to do it with TOS. Tasty Trade is more for my trading style, which would be for selling contracts. If you are international, which I imagine many of you are, IBKR is your go-to. Would you be able to recommend or point me in the direction for swing trading? I work in construction, 6 a.m. So it's a struggle right now. So if you're looking for more swing trading sort of setups, I would recommend this book right here. He is a majority swing trader. I would recommend this just for you to have the book as reference so you can look at more of your indicators for more long-term swinging trades. If you're in the same space that I am, because I was remodeling kitchens and bathrooms when I first started doing this, you want to use something called the TTM. So the TTM is this right here. I use the TTM and RAF. This is another indicator that you guys do have to pay for. It works similarly to the MACD, but the squeeze indicator here is normally going to give you the indication for when you're looking to follow through on a specific move. So you can use your VWAP, which is fine, but VWAP is normally considered more for shorter term trades. Now your TTM is going to give you a little bit more of a laggy indicator, but you can catch a little bit more of the move. I don't have all the time in the world to explain exactly how that would work, but this is your reference point in my opinion. It's a $45 book that will get you in the mindset of how it is that you would look for swing trades. So there it is. Hopefully that's helpful. Stay away from Robinhood, E-Trade, and Webull. I cannot agree with you anymore. So Robinhood, Webull is actually not the worst, but Robinhood is literally in cahoots with the devil, literally. And if anyone knows what I mean, I'm not going to explain that, but Robinhood is no good. It's absolutely trash. On your next webinar, may you please teach us how to use the TTM squeeze? I'm going to let our CEO decide that because she's going to watch this back. And then she's going to say, hey, Sage, this is what we need to do. This is what we need to focus on because our audience dictates what information we're going to be giving you. Okay. It's not what we want to teach you. It's what you guys want to learn. That's what's important. That's part of our relationship with our customers. So I will bring that up. Nathan, remind me as well. We're going to talk about this webinar as soon as I get off. But we can talk maybe specifically just about indicators on one of the future webinars. What are your thoughts of trading futures with funded accounts? That is fine. I'm a futures trader. Many of you don't know this, but I'm a futures and commodities trader. It is something that I focus on unbelievably. It takes up a lot of my time. It's fine to do so. Just be mindful of the cost of your futures trades because for some platforms, it's $2 per contract. So if you're trading high volume, you can be susceptible to something called slippage, which you don't want to be part of. So just be careful.